All right. Matt, the mortgage guy. In today's video, I'm going to talk to you about when does the housing market finally slow down? Rising interest rates, rising home prices. Where is the inflection point? When are we going to see a slowdown? What I'm going to do is I'm not going to be fear, uncertainty, doubt. The market is crashing. I'm not going to be, the sun is always shining. Rates can double, no problem. Buyers will still be coming out in droves. Home prices will continue to appreciate 20% a year. I'm going to be neither one of those extremes. I'm going to be in the middle, giving you advice based on real world data, based on conversations with consumers, based on a lot of real estate and mortgage industry knowledge from folks I know who know a lot of stuff. All right, let's jump into it. Matt, the mortgage guy, mortgage broker, talks to hundreds of consumers, real estate agents, other mortgage folks every single month. I take the information and the knowledge that I gather from these smart folks, smarter than me, and I share it with you, the average Joe who just wants to get a little bit of insider knowledge or help or whatever the heck you come here for, right? Like, comment, subscribe, do all that stuff for the YouTube algorithm while we're talking about that. In today's video, I really want to provide some calm to the conversation around the real estate market, because I think kind of like what happens in politics and other things, there's two extremes and there's people shouting from the rooftops on either side with really no basis for some of their arguments. The sun is always shining. Real estate will go up 25% a year because real estate's a great investment. Because I said so, that's a bad argument. Real estate has gone up for so many years in a row, it's got to crash. That's also not a very valid argument, right? Somewhere in the middle lies the truth, right? And I think there's a couple things we need to consider and we need to look at. In this video, I'm going to go over them, right? One is that as interest rates increase at the fastest pace they've increased since 1994, right? A 3-month period where we saw like a 1.3% increase to the interest rate. As we peak above 5%, as of the making of this video, what I have behind me here is like a national average, a survey that I get at mortgagenewsdaily.com. I like it a lot, so I reference this a lot just because it's a national average. It will give you a good idea as a consumer where the 30-year fixed rate is at. Above 5%, where we saw it below 2.7 as recent as August of 2021, that has an effect on buying power. It has an effect on consumer sentiment and how good they feel about buying a house, but how much is the question, right? If we've got supply versus demand imbalance that's like this, and demand comes down to here because of rates, and we've still got more demand than supply, prices will still go up. If at this imbalance, they were going up 20% per year, and you come here, maybe it's 7% per year, but it's still an imbalance where there's more demand than there is supply, home prices go up. If demand falls so much that there's more supply than demand, then home prices can level out or they can even decrease, right? And our job as level-headed professionals, and your job maybe as a consumer who might be considering purchasing real estate, is figuring out where we realistically think things are headed, right? Q2 of 2022, I can tell you that I generally can see things, feel things, I hear things before it reaches any sort of stat that's going to be published mainstream, right? Buyers start talking about certain things and start getting cold feet and start making less offers, and less people that were pre-approved are continuing to shop for houses. That is going to be felt by somebody who's in the business before it reaches, you know, a newspaper article, right? That stuff lags, as with any data, right? The data that shows you the closings show you the closings. The data that show that the people talking about submitting an offer right now on a deal that's going to close 30 days from now is the leading indicator versus the lagging indicator, right? So anyhow, with all that being said, what I think is starting to happen in Q2 of 2022 is buyers are starting to realize what an impact this change in interest rates has on their buying power, and their decisions are changing because of it. It doesn't mean they're not going to buy, but maybe they move to a different area. Maybe some that were going to sell and then buy decide to hold off on that, and they just fix up the house they're in. Maybe those that were, gung-ho and ready are going to wait. Whether that's right or wrong, I'm just saying that might be a decision. Real estate agents I'm talking to had 30 buyers that were pre-approved and they were interested. Many of them have told me, Matt, some were unrealistic, some weren't truly ready, some were less motivated. Now I've got 12 to 15 that I really think are submitting offers and are going to buy something in the next 3 months, right? That is an indication that demand is waning. Demand is coming down, as you would expect. You don't see it, feel it, or hear it quite yet, but I think it's coming, right? So what does that mean for you, the consumer? If there's 15 offers, if things are selling $50,000 above list price, if the average days on market where you're at is 22 days, what you can track to see if prices will start to cool off, and by cool off, I don't mean they're going to go down 20% in Q3 of 2022. I mean that like something that's listed at 500 might sell at 515 instead of 550. You might be able to get it in 3 months for that same 515 versus what we've seen where it goes 550, 565, 580, right? And something that you could buy 3 months ago all of a sudden is 7% more only a quarter later, right? I think that is mostly behind us, not in all areas and not in all, like price points, but like just overall, I think that's what we start to see, right? So what you can do in your market, Sacramento County is my market, I'll take you to this page, is track days on market. This is a 5-year chart that will tell me housing inventory, the median days on market in Sacramento County. The end of 2019, which happens to coincide with, rates going up, this was all the way up to 55 days on market. Then we saw early COVID, this go all the way down to 22 days on market. Highly competitive market when we've got 1 month of inventory, give or take, right? These are just hovering between 30 and 40 for most of 2020. As we saw, when there's 1 month of inventory, that is a very competitive seller's market where things are going to sell like hotcakes. And look at 2021. This was hovering like mid-20s. Ridiculous seller's market. There's always going to be higher days on market in the winter. That's just like how real estate works seasonally, right? Like all these peaks in all these Decembers, like it just happens, right? But look at what we've seen early 2022, all the way down to 22 days. Every market is different. A lot of markets are acting similar though, right? If we see this 22 go to 27 to 34 to 42 and it gets up here, we're going to see the market flatten out, right? The crazy part is it's got a 2.5x, right? To get to January of 2019. Don't have those stats offhand, but maybe, this market month over month is seeing very little home price appreciation. Where we're at right now, strong seller's market, 27 days, 32 days. Maybe we get 3 offers. Home price appreciation goes from the bananas levels that it's at to single digits. That's my hope. Honestly, that's a lot of buyers' hope, but this is the stat to track, days on market. So whatever market you're looking in, whatever market you're interested in, you could probably Google days on market, whatever county, and you'll find this St. Louis Fed data, right? This is economic data that's just available through our friends on the interwebs. So hopefully this was helpful. Let me know how we can help. Any questions you have, comment on here. Let me know what you think, what you're seeing in your market, what you're feeling. I think we've got some brighter sun ahead for home buyers. I really do. I don't think the sky is falling. I don't think anybody who's buying now is making a mistake. I don't think that anybody who's thinking about waiting a year is going to have any advantage, right? I just think it's going to get a little bit easier. It's going to go from very competitive seller's market to, quite honestly, still a seller's market, but just a little bit less competitive. So as with everything, we gonna see, right? Go to greatmortgagebroker.com, fill out the form, let me and my team know how we can help. We are more than happy to. And until next time, like I said, we gonna see.